it is important we understand the theoretical aspects, because it will also help us when we come to the practical aspect of the course. So now we are going to look at nature and purpose of management accounting. We'll look at the purpose and management, the purpose and nature of management accounting. You know, mostly management accounting is prepared for internal consumption. Unlike the financial accounting that is for external use, management accounting is for internal use. And all this has to do with information. And when we are talking about information, we are talking about data that will translate to information. You will have data, which will be the input. Then after being processed, then it will become information. And it is this information that management counter will be providing for management for efficient and effective decision. So now we are going to look at what is data. What is data? You are collecting data as an accountant. You process this data and make it available in form of information to the management. So what is this data? Then what is information? So now from the topic, they said nature and purpose of management accounting. So now, well, I said we are going to look at what data is. So what is data that will be collected, to be processed, and obtain information? So that, what is data? When you hear the term data, what does it refer to? Data are raw facts. They are raw facts that on their own, they do not make much sense. Until they are processed into information.
Please, your line is breaking. Your line is breaking, sir.
Network at this end. Can you hear me clearly now?
It's better now.
Okay, okay. So I said data are raw facts that on their own, they don't make much sense until they are processed and transformed to information. So it is information that will make much sense for decision making. So now we say data are raw. The data are raw facts. Right. Data are raw facts. Data also consists of unprocessed facts. That is raw, unprocessed. Is the same as raw. If it's unprocessed, the unprocessed fact is something as raw facts. And statistics. So this is what data is. They are raw facts. They consist of unprocessed facts and statistics. Then data are also is collected and processed produce information. So you see, you collect data to process it and produce information. So this is data. On their own, they don't make much sense or meaning. But when they are processed into information, that is when you have, that's when they will become more meaningful. That is when they become more meaningful. Then when it is processed, when process this data, the end result is what we call information. Information. This information has meaning and purpose. This information has meaning and purpose. It is produced. This information comes from the data that is being processed. So this information comes from data. Are we together? Can you hear me?
Yes.
Okay. So I process data that are relevant or useful to the purpose intended. So this is what information is. So when you process this data, the outcome is information. So at least now we know what data is and what information is, right? Because as a management accountant, that is what you do. You're processing raw data to provide information. That is what you will do. Are we together?
Yes, sir.
How do organization collect data? How do organizations collect data? Example, when they make sales, they record sales, they record their daily transactions. So in that situation, they collect data. You make sales today, you record it. You make purchases, you record it. You make any expenses, you record it. So all these records you are making on daily basis or on each transaction is data. You place the data. Then now, after you collect the data, you now process it. When you process it, you produce information. In that information now, we'll be able to know how many customers you were able to serve in a month, a year, or in a week. It now become information. And this will guide the management on decision making. At least at the end of the month, they will be able to know the quantity that is sold. So that will guide them in making decision, either to increase if there is need for that, or to reduce production. So this is data and information. Is that clear? Or did anyone have any question regarding this data and information? So the next thing will be the qualities of good information. The quality of good information. What makes information to be a good information? So that's what we are going to look at. Any information that falls short of this will not be a good information. For information to be good, it has to possess these qualities. One, understandable. So information has to be understandable. The person information that person should be able to understand it. The person you are passing the information to should be able to understand the information. That's one of the qualities of good information. Then two, purpose and relevance. Purpose and relevance. The information will have, why is the information being produced? What purpose is it to serve? That is one of the qualities of information. And the relevance. It has to be relevant to the intended purpose the information will serve, and the information has to be relevant to that purpose it serves. Then number eight, the third one, the third characteristic or quality will be reliable. Reliable. The information has to be reliable for it to be good. It has to come from a trusted source. It has to be correct. It has to be accurate. It has to be reliable. You trust the source of the information, and then you act on the information. Acting on the information that you don't trust the source can cause problem, because it may not be accurate. And if you are acting on information that is not accurate, there is no way you will get expected results. Then it has to be number four, sufficiently complete. It has to be enough and complete. It has to be complete. It has to be complete. For information to be a good one, it has to be complete. Then number five, timeliness. It has to be on time. Providing information set for its purpose will make it invaluable. It will be of no value. The information that you need to make a decision in January is not available in January, and is made available in May. It will be of no use. The time you need it has passed. Hello? Hello, class? Hello?
I can hear you now,
Okay.
but you're still breaking.
It's network. I don't know what is wrong. I don't know what is wrong. It's network. Someone is raising hand. You have a question? Okay. The timeliness, it has to be on time. Number six is comparability. Comparability. For information to be good, it should be able to compare it between periods. Be able to compare the information between periods. Comparison. The current year and previous year. You should be able to compare. That is comparability. You'll be able to compare the information for information to be good. Then sound communicated to the right person. The right person. Information, for it to be a good one, it has to be communicated to the right person. The person that needs it, the person that will use it. If it is communicated to the person that needs it and will make use of it, then it will be a good information. But if you are taking an information to someone who doesn't need it or who will use it, then it's a waste of time. It will be of no use to him. So communicate with the right person. If, for example, in an organization, in a manufacturing setup, information that is needed in the production department, and you take it to the sales department, it's not useful to the sales department. So for that information, it has to be communicated to the production department. It is that department that will make effective use of that information because it affects the department. Number 8. The economy, that is the cost. Its value must exceed cost. Its value must exceed its cost. So the value of the information must exceed the cost of obtaining the information. That is cost effective. In brackets, you can say it cost effective. So information should be good information. Its value must exceed its cost. If the cost exceeds the value of the information, then it is not good information. Spending more on what shouldn't be spending more on. Are we together? Are you getting it? Hello, class. Hello.
Yes, sir.
Okay, that is good. Please, let's be interactive. Let's make an interactive class. So, do you have any question on this? Is it clear? The qualities of good information. This is has to be there in every information. That information be a good information.
Please,
Is
your
that
line
okay?
is breaking.
Okay, what about now?
It's still breaking.
Let me try. A good class. Okay, can you hear me now?
Very clear, sir.
Okay, let's do it. Let's continue. Okay, that is good. So, do you have any question regarding data information and qualities of good information?
For me, no, sir.
Okay. So the next thing we will be looking at is the importance of information. Importance of information. Importance of information. What are the importance of information? And this information now, we are going to classify them into we will classify these informations into two, into financial and non-financial information. We'll look at them in the aspect of financial information and non-financial information. So when we say financial information, let's look at it. Financial information, what does it mean and what does it entail for information to be financial information? So financial information is qualitative. It's qualitative data expressed in monetary terms. So any data that falls within this category referred to as financial information. So there are financial information is qualitative data typically expressed in monetary terms. It has monetary value attached to it. Example, we have costs of materials. Cost of materials, information that provides cost of materials is financial data. It provides cost, it provides a monetary value to items. Cost, we have purchases. They are made with money, costs. We have wages. We have expenses. We have selling price. Selling price. These are examples of qualitative data, that is financial information. Contains information about finance, cost. Then the non-financial information. financial information aspect, you will obtain all information that has to do with the financial operation of the organization. Then when you come to the non-financial information, this is the type of information you will get today. Information about organization performance, information about organization strategy, information about organization environment. Even the performance, we have financial performance of an organization and we have the non-financial performance. So the non-financial performance information will be getting from the non-financial information. And we have financial performance. The financial performance information will be getting from...
Please, I'm not hearing anything, sir.
What is going on? Can you hear me?
Very faint.
Well, it is the network.
Hello?
What about now?
That is very, very faint, and I'm putting my phone on speaker.
Let me move it. Hello, can you hear me now?
Yes.
Okay. Okay. So we are looking at the two classifications of this information. We categorize them into financial information and non-financial information. And we say the financial information is qualitative. It's qualitative in the sense that it is expressed in monetary terms. Example, cost of materials, purchase, wages, expenses, and selling price. All these are expressed in monetary terms. So they are financial information. Then we say the second one is the non-financial information. And we say these are qualitative data that is not primarily expressed in monetary terms. So these are information about organizations, but they don't come in monetary terms. It describes various aspects of an organization's operational strategy. It shows performance. Now, the non-financial performance of the organization, it shows the performance, the strategy of the organization, and the environment. There are informations about environment in which the organizations operate. So these information are not expressed in monetary terms. They are qualitative in nature, not quantitative, because you can't express them in monetary terms. The strategies that will be adopted by the business is also expressed in qualitative terms. It is not expressed in monetary terms, so it is qualitative. Then the performance, the individual performance or the management performance, and the entire business performance can be classified in two. You can have the qualitative performance and the quantitative performance. When you're dealing with the quantitative performance now, you are looking at the financial performance of the business. That is where you determine whether the business is making profit or not. The business is doing well in its earnings or not. That is the financial performance. Then operational performance is qualitative. It's not expressed in monetary terms. Is that okay?
It's okay, sir. But then there's somewhere I'm confused.
Okay.
Okay, I'm confused. Somewhere you are mixing up. So on what you wrote on the Excel here, you said the financial information
Yes.
is qualitative, but what you are
Yes.
telling me, what you're saying is quantitative. So
Financial
you are
information,
putting
sorry, is quantitative. It's quantitative. Sorry. You are correct. It's quantitative. The financial is quantitative. The financial is quantitative. It's not qualitative. It's quantitative. It's quantitative. Do you get it now?
yes.
Okay. Sorry about that. It's a mistake. It's quantitative, not qualitative. It is the non-financial that is qualitative. So this is for the classification, the financial and the non-financial. And we can have both financial and non-financial information. So, but this financial and non-financial, they are all crucial for effective decision making. The financial and the non-financial, they are all important in decision making. They guide management on decision making. So now we look at the importance of management information. So the importance of management information is the same thing as the importance of information. What do we use information to? What is the importance of information? So one, the importance, let me put it. Sorry, we are within the study pack. We don't go outside the study pack. I'm using the study pack. So now we have the importance of management.
Sorry, sir. Please, can
Importance
you
of
move it?
management.
So I can see that end
Hello?
of the. Can you hear me?
Okay, okay. After
Please
I
move
finish,
it.
I will
Let
even
me
share
just.
the. Okay. Is it okay?
Yes, let me copy it, please.
Okay, okay.
That's okay, sir. Thank you.
You're welcome. So when I'm done, I'll also share the file through WhatsApp, the folder. The Excel sheet, you have it through WhatsApp when you are done.
Okay, sir. No problem, sir.
Okay. So now, the importance of information management. The importance of information management information for planning, control, and decision making. So importance of management information for planning, control, and decision making. So now let's look at it. Okay. The first one, management information for planning. Management information is important or vital for information planning, control, and decision making. One, because this is important, because it enables organizations to convert data into actionable insights, leading to improved performance. So this is one of the importance of this management information for planning, control, and decision making. Management information is important or vital for planning, control, and decision making. The reason is because it enables organizations to convert data into actionable insights, leading to improved performance. Leading to improved performance. So this is one of the importance of management information for planning, control, and decision making. It enables organizations to convert data into actionable insight, leading to improved performance. Two, it allows organizations. It allows organizations to analyze all factors necessary for strategic plans. With the strategic plans, it helps in optimizing resources allocation by providing data on current performance. Okay, so these are the importance of management information for planning, control, and decision. In the area of planning, control, and decision, the importance of management information. One, it enables organizations to convert data into actionable insights. That is, you process data to get information that will be used in making effective decisions. Then two, it allows organizations to analyze all factors necessary for strategic plans. That is the management information. It allows organizations to analyze all factors necessary for strategic plans. The data, when processed, will provide information for every aspect of the business and every factor. So from there, it will give the management the leverage or opportunity to analyze their strategic plans. Then it helps in optimizing resource allocation by providing data on current performance. So you see, it also helps in optimizing resource allocation. You will know which resources you will allocate to which unit or department by using the current data that is available. Is that clear? Hello?
I'm
Hello, do
here.
you get this one? Do you get
So the
it?
network is the network is quite unstable, and I can't see your screen.
Oh, sorry. Let me
I can hear you.
Okay. Can you see the screen?
Yes, I can see your screen.
Okay. So I guess it's the
You should
network that is
the
giving
app
us issue.
play, so
Pardon? So is there any question regarding all this? Did anyone have any question, or is it clear? If it is clear, we move on. If you have question, let's hear the question so that we can address it before we move on. No question? Can you hear me
no
clearly?
question from me, sir.
Okay. So now we are going to look at the levels of information, different levels of information. We are going to look at different levels of information, and we have about 3 levels, from the operational level, tactical level, to the strategic level in hierarchy. So if we're looking at it in hierarchy, we'll start with the strategic. That is the highest. That is the decision level. Then we have the tactical level. That is the information management level. Then we have the operational level. We have the operational level. That is where the data are being collected. The data will be collected at the operational level. Then it will be transferred to the tactical level. Then the tactical will now process it and provide the information. The tactical will process it into information and then make the information available to the strategic level. And the strategic level will make decisions. So let's look at it. The levels of information. Levels of information. One, we have the strategic level. The strategic level. And at this level, that is the level of decision making. We have 2, the tactical level. They are the middle managers. The middle managers. Then we have the third, which are the operational. So these are the 3 levels that we have. So, and each of these levels have their function. The strategic levels now, they are the ones that make the planning, setting the goals and objectives of the organization. That's the strategic level. They develop the planning and strategy of the organization. So they set the overall goals and objectives of the organization. Then the tactical. The tactical now, they develop short-term plans to implement. They are at the middle. Then the operational. The operational are the ones carrying out the daily operational activities of the entity, including production, the production schedules, work schedules, machine utilization, plant maintenance, delivery schedules, and all other schedules that occurs at the bottom level. Are we together?
Yes, sir.
Okay. So these are the three levels: strategy, tactical, and operational. Then if we say management accountant, management information and the accountant. So what type of information the management accountant provide and to who? Management accountants provide information to management. And for what purpose? Is for decision making. You collect the raw data, you process them into information, and you make this information available to the management for decision. So now we are going to look at accounting information. What is accounting information? What is accounting? What is accounting? Can anyone help us? You say it's a systematic recording of financial transactions. Is that right? Hello?
Yes, sir. Yes, sir.
Okay, let me have it. Let me write it. Accounting is the systematic and comprehensive recording of financial, it has to be financial transactions pertaining or as it pertains to a business. And the process of summarizing, summarize all this, summarizing, the process of summarizing, analyzing, and reporting. You summarize, you analyze, and then you report. Reporting the transactions. So this is accounting. Accounting is the systematic and comprehensive recording of financial transactions pertaining to a business and the process of summarizing, analyzing, and reporting. You report the transaction. So this information now, this accounting now, the recording, you are recording information. So it is a source of information too. You record data that will be processed and analyzed. So when the processes and the analysis take place, then you obtain information. We also use accounting information for decision making. So the main purpose of accounting to provide a record is to provide a record of financial value of business transactions, to establish financial controls and reduce the risks of fraud, assist with the management of financial affairs of an entity, then provide information, merely information of financial nature. So let's have it. Purpose of accounting. Purpose of accounting. Why we engage in accounting. One, provides the financial records. Provides the financial records of business. Two, establish financial controls. Establish financial controls and reduce the risks of fraud. Reduce the risks of fraud. Then three, assist with the management of the financial affairs of the entity. That is the business organization. That is the entity. That is business. Then number four, provide information. It provides information. And merely this information is of financial nature. So the type of information provided is of financial nature. If it is not in financial nature, then it is not accounting information. Good. Financial nature. So these are the purpose of accounting. Provide financial record of business, establish financial controls and risks of fraud, and reduce the risks of fraud and reduce establish financial control and reduce the risks of fraud. Assist with management of the financial affairs of the entity, that is the business. Then provide information of financial nature. So it will provide information, but this information that will be provided is of financial nature. So when this information are provided, the management will use it to make informed decision. So now After financial accounting, you look at management accounting, and then we compare what is the difference between financial accounting and management accounting. So management accounting. What is management accounting? Management accounting provides financial and non-financial information internally to assist managers in planning, controlling, operations, and decision making. So this is management accounting. Management accounting provides financial and non-financial information internally to assist managers in planning, controlling operations, and decision making. So management accounting it provides managers with information for planning, controlling, and decision making. As you can see the difference. Management accounting is for internal consumption. It is prepared for managers. But the financial accounting can both be used by the managers and also the outsiders. But mostly it is prepared for stakeholders and shareholders. Hello, are you there? Hello?
Yes, sir.
Okay. Are you getting it? Do you get the difference between the financial accounting and the management accounting?
I'm getting it, sir.
Okay, that is good. So now we know the purpose of management accounting. The purpose of management accounting is for planning, control, and decision making. That is the purpose of management accounting. For planning, for control, and for decision making. Planning. How does the management accounting helps in planning? So we say planning involves setting the objectives to the organization. So the management accounting helps the organization in setting its objectives and making plans on how to achieve these objectives. The information provided by management accountants guides the managers in planning. Then the control. The information provided by by management accountants to managers guides them in control of performance of the organization and monitoring actual performance and comparing same with the objectives or plan. They carry out comparison to see if they are within track or they are derailing. If they are going outside track, immediately they will adjust to come back on track. Then decision making. It provides information to managers for decision making. They look at the information provided, look at the areas that need adjustment, look at the areas that need improvement, look at the areas that need more resources, and also look at the areas that will need less resources. So all this information provided by the management accountant will assist the managers in carrying out decision. So role of cost management and financial accountant. We also have cost accountant. Who is a cost accountant? What does cost accountant does? Cost accountant, management accountant, and financial accounting. So now let's look at cost accounting. Cost accounting is concerned with identifying the cost of things. That is what cost accountant does. They are concerned with identifying the cost of things. How much does it cost to produce this item? That is what cost accountants does. It involves the calculations and the measurements of the resources used by a business in undertaking its various activities. So this is cost accounting. Cost accounting is concerned with identifying the cost of things. It involves the calculation and measurement of resources used by a business in undertaking its various activities. It's only concerned about cost. How much do you incur or spend in producing this? From the labor cost, the material cost, and all costs that is incurred in the process of producing that product. It is the cost accountant that carry out that tax. Then is only concerned with providing information to management that can be used to help in decision. Then we say the financial accounting is concerned with recording, analyzing, providing financial performance. So now if you are comparison of financial accounting, cost accounting, and management accounting. So now we are going to compare them and see. Now, financial accounting. The financial accounting system is used to record the financial transaction of entities, such as transactions relating to revenue, expenses, assets, and liability. So these are the elements of financial statement. Dealing with financial accounting, you will find revenue, expenses, assets, liabilities, and equities. Financial accounting. It provides record of assets that the company owes and what it owes and the record of the income that the entity has earned. Financial accounting. Financial accounting is prepared for external purposes, for external users. Managers may use the information in the financial statement, but the main purpose of financial reporting is for external users. Are we together? Hello?
Yes, sir.
So financial accounting purpose, the main purpose of financial accounting is for external users. When we say external users, we mean those that are outside the organization. They are outside the organization. They could be the customers, they could be investors, they could be bankers, they could be government, but they are outside the organization. So we refer them as external users. Then if we said internal, which is the management accountant, now the management accountant then provide information for internal. So his information is being used by the management, by managers to make decisions within the organization. The cost accountant provides details or information on costs. And it also provides his information to managers. So cost accountants too provide information to managers for decision making. So their own information too is for internal use. So management accounting and cost accounting information is for internal use. It is only the financial accounting that is merely for external. So now if you are to compare the two, if you are preparing financial accounting, you use legal or regulatory frameworks. What are these regulatory frameworks? They are the standards that we have. If you're preparing financial accounting, you follow the standards. International Financial Reporting Standards. But if you are preparing cost accounting, you only prepare it to meet the need of management. You don't have any standard to follow. You only follow the rules of the organization as regards to providing those information. Then financial account, if you are used to preparing financial statement for stakeholders, if you are preparing financial accounting, it is being prepared to meet the need of shareholders and other external users. These are the users of financial accounting, the shareholders and then external users. But for the cost accounting, you only prepare it and provide the information to management for internal use. The content of financial accounting is specified by regulatory framework. But for cost accounting, the content are specified by the management. It is the management that will design how their reports will look like. That's for cost accounting. Then for financial accounting is prepared within a time frame. specified by a legal or regulatory framework. You know, we provide financial accounting usually for 12 months, 12-month period, that is annual. But for the cost accounting, it is prepared within the time frame specified by the management. The management may decide that the cost accounting report should be provided monthly or quarterly or even weekly, depends on the management. Then in the financial accounting, we record revenue, expenses, assets, and liabilities. But in the cost accounting, we only record cost of activities and use to provide detailed information about costs. Then the financial accounting merely provides a historical record. It is historical in nature. It records past events. It records past events. Then the management accounting or the cost accounting provide historical information, but also used extensively for forecasting. That is for projections. You use this to forecast from so period to so period what happened. Then we can be able to say from so period to so period, this is what is likely to happen. Analysis financial and cost accounting. Financial and cost. So look at this. Financial accounting, cost accounting. Financial accounting research, prepare, prepare to meet regulatory. Okay. It is prepared to meet regulatory framework. Prepared to meet legal or regulatory requirements. Then the cost accounting, is prepared to meet the needs of management. So this is the comparison between the two. Then two, financial accounting prepares prepared for shareholders and external users. While it's prepared for management, who are also referred to as internal users. Internal users. Then the third one, number 3, contents specified by regulatory framework, the International Financial Reporting Standard and the rest. The regulatory framework. Then content specified by management. For my focus accounting, content specified by management. Then 4, prepared within time frame. Within time frame, usually annually. Then for prepared within time frame specified by management. Used number 5, used to provide historical records. Records, then provide historical information, but also used forecasting. That is futuristic. Is futuristic. So these are the comparison between the two, financial accounting and cost accounting. So do you have any question regarding what we've done so far? Hello?
Yes, sir. Sorry, I would really love for you to sorry to take you back. I'd really love for you to explain these levels of information. You know, you were giving
Oh,
us explanations on the strategic, tactical, and the operation. I didn't get the explanations properly.
okay, okay. So I arrange them hierarchically. Um, the the strategic level is the highest level, and that is where decisions are being made in the organization. They set the objectives, the goals and objectives of the organization. Do you get that now? It also refers to as the decision level. That is where decisions are being made regarding the organization. Do you get this?
Yes, sir.
That is good. Then the tactical level is also referred to as the mid level. At this stage, at this tactical level, mostly that is where you find the management information officers. The management information officers is at that level of information that you will find them. Those that would process data into information. Those that will convert or translate those data into actionable insights. They are found at the middle level. Do you get that?
Yes, sir.
Good. Then the operational level, which is the lowest level, mostly this level are the ones at the transactionary stage. They are the ones mostly collecting data. For example, those at the counter or at the reception, those making sales. You understand? When you come to buy, they make entries. That is, at that process, they are collecting data. So they fall within that operational level. Do you get this?
Yes, sir.
And so now the data they will collect will now they will now store it. Then those at the tactical level will now make sense of these data collected at the operational level. Then it will now become, then they will now process it to information. Then they will now send the information to the strategic level. Then the strategic level now will now use the information to make decisions regarding the organization. Is that clear?
Very well understood, sir. Thank you.
Okay, you're welcome. Thank God. Thank you. Okay. So now you look at the comparison between the two. the financial accounting and the cost accounting as I explained. Do you have any question, any concern regarding it before we can proceed? No questions. So now can we look at the role of management accountant? What roles does management accountant play? So from the definition of management accounting, we can also know what management accountant does. So what are the roles of management accountants? Let's see their roles. The role of management accountant. Role of the management accountant. Okay. So role of management accountant. One. Management accountant provides managers or management, all the same, with financial insights, costs, control, and management cost control and management. Two, evaluating costs effectiveness, Three, budgeting and forecasting, and forecasting. Four, risk management. Five, internal control and compliance. internal control and compliance. Then 6, financial analysis and reports. Okay, so these are the rules of management accountant. These are some of the roles of management accountant. One, management accountant provide managers with financial insight regarding cost control and management. Management accountant assists in identifying, this is how he does it, the cost control. He did it by identifying, controlling costs, by analyzing expenses. He analyzes expenses and suggests cost saving measures. That is one. Then 2, evaluating cost effectiveness. The management accountant evaluates cost effectiveness. Evaluate the organization costs and see how effective it's being handled. They evaluate the cost effectiveness of different processes and provide relevant suggestions for management for decision making. They evaluate all the costs, they evaluate all options available regarding cost effectiveness to see the areas where management can make savings. That is the number 2 role. And they will recommend those areas to the management for decision making. Then budgeting and forecasting. The management accountants, they play an important role in preparing budget for the department and the organization as a whole. It is the management accountant that prepares the budget for department and then for the organizations as a whole. Then risk management. The risk management aspect. The management accountant identify and assess financial risks associated with different decisions made by the management. So they carry out risk assessment. They carry out risk assessment. Then internal control and compliance. They play a crucial role in monitoring and improving internal control to ensure accuracy. Now they make sure that internal controls rules are followed to ensure accuracy and integrity. Then financial analysis and reports. Management accountants analyze financial data to identify trends. They identify trends and variances. Then they look for areas of improvement by providing detailed reports. Are we together? Do you get these roles of the of the management accountant?
Yes, sir.
Okay, any question regarding the roles of management accountant?
Not
Okay,
at
these are
all.
the functions. Okay, okay. So thank you. I think we are done with on the role of management accountant. So these are the roles they play. So now we are going to look at management information system, which is also known as MIS. We are going to look at management information system, which is also known as MIS. Management information system. Information systems is also known as ICAN. So now let's see management information system. So what is management information system? MIS, which is also the management information system, comprise various computer hardware and software organized in a desired format to collect data from multiple sources. From multiple sources. When they collect this data, you analyze them, and produce meaningful information for management decision making. So this is the management information system. Management information system comprises various computer hardware. We are talking about computer hardware. Do you know what computer hardware is? Can any one of you give me an example of hardware? Computer hardware? Example of a computer hardware? Can anyone give me an example of computer hardware? Hello?
Hello,
Hello,
sir.
class?
Okay,
Yes.
there is system monitor, there is keyboard.
Yes. Thank you very much. Yes, we have monitor, we have keyboards, we have printers. All these are hardware. They are computer hardware, you are correct. And then we have software. We have software. So in management information system, you are bringing together computer hardware and software. Then you organize them in a designed format to collect data from different sources, from multiple sources, then analyze them and produce meaningful information for management decision. So you see, if you are defining management information, you are talking about computer data, computer hardware and software. It even including humans, because it's human that will operate those computers. You organize them in a format, then you use them to collect data from different sources, and then you analyze the data. That is information management. Analyze the data and produce meaningful information for decision making. This is management information. Using computer hardware and software, design it in a way that you used in collecting data from different sources, analyze this data, produce meaningful information to management for decision making. We have software, we have different softwares. In our systems, we use software. We have operating software that starts the system. We have Microsoft software that we use. We use MS Word for typing and other things. We use Excel. You understand? So we have different software for different purposes. In accounting, we have software that we use, like the QuickBooks, the Zoho. The architects have their own software that they use to make designs. So all these programs are software that are used. Hello?
So I can hear you.
Okay. So do you understand this, the management information system? What it stands for, how it works?
Yes, I do.
Okay. So the next thing now we are going to look at is executive support system. We've looked at management information system, MIS. So now we'll see what executive support system is. What is executive support system? Executive support system, also known as ESS, short form. The ESS stands for the Executive Support System. So now the executive support system is mostly used by the executives, by the top executives. You know, the top executives, they don't have that much time to start looking at data, large data. They don't have that time. So these large data now will be transformed, will be designed into dashboard and transformed into actionable insight. So the executives will just look at it, they'll just glance at it, and they will have the overview of what transpired in the organization. So in a way, they are simplifying the entire organization's information for these executives. So that is the executive support system. You support the top executives. So now let's look at it. It says this system interface such as dashboards. They are designed like dashboards, which enable the top executive to instantly generate information for business decision. So now look at it. We said EES are designed to allow busy executives generate information for business decision. They come in form of dashboard, are designed to allow busy executives generate information for business decision. So they generate information from, let's have it, a wide range, a wide range of corporate data base, database. For business decision. So this is the executive system support. They are designed to allow business executives generate information from a wide range of corporate database for business decision. So business decision making. Yes, for the business decision making. And this executive support system, mostly they come in form of dashboards. They come in form of dashboards. They come in form of dashboards, which assist the managers in generating instant information. So this is the executive support. The ESS are designed to allow busy executives to generate information from wide range of corporate database for business decision making. And they come in form of dashboards, which assist the managers in generating this information. Hello? Do you get the business executive? The executive support system? Hello?
No, sir, I did not.
Okay. So look at it here. I said the executive support system. These are designed in form of dashboard. So they are designed to allow easy executives generate information from a wide range of corporate database for business decision making. So they are designed in their systems. They have it in their system, but they are designed as dashboards. They will summarize all data generated in the organization, and they will come in form of information to the top executives. Mostly it's the top executives that use this ESS system. So they don't have that much time to go through every information in the database. So what they do is they design it as a form of dashboard for them in their system. So they will just enter through their system and they will have everything summarized. They will have the entire information summarized. That they will just look at it at once and have the picture of what is going on in the organization. Do you understand it now? Hello? Hello?
Yes, sir. Yes, sir.
And mostly, in most cases, they usually come in pictorial form. It is visual, in visual form. They will only visualize it. Maybe, for example, you know how in your bar chart, right? For example, now when they it come in form of tables, pictures that will depict the information of the organization, but in form of pictures. So when they just look at it, they will know which area is performing, which area is not performing, because it has been tabulated. They will just look at the pictures, and from there they will know what is happening in the organization. So now the next one will be the decision support. This one now is the executive support. The next one is the decision support. The decision support system. This one is DSS, Decision Support System. This one is a group of information. This one is a group of information system program routines that aid decision makers to use computer information. And data to make effective decision. So look at this one now. This one is decision support system, DSS. We say it's a group of information system. Group of information system programmed routines that aid decision makers to use computer information and data to make effective decisions. So this one too, this decision supports system too use graphs. It uses graphs and other visual aids to help busy executives take business decisions. This set of systems may include expert system and artificial intelligence. So this one is designed for decision making. It supports decision making. This system is designed to support decision making. And this DSS, this decision making, five categories of decision support system. The five categories of this decision support system are: one, the communication, the aspect that is used for communication driven DSS. Communication driven decision support system. We have five categories of this decision support system. So the first one is the communication driven support system. So these, as the name implies, these are driven by the data and communication network devices to achieve collaborative tasks such as visual meetings. It allows for visual meetings, instant messaging, or group chats. So you use this aspect for communication. The first aspect of the decision support system, the communicative driven aspect, you use it for communication, instant messaging, just like the Microsoft Teams that we are using now for lectures. It is the communication driven aspect of decision support system. Then number two is the data driven. Data driven decision support system. Data driven. So this data driven decision support system are mostly used by airlines for booking. You understand? Airlines for booking of flights, booking of air tickets, for booking of hotels, and reservation that you can do online. So it is supported by this decision support system, by this aspect, the data-driven aspect of the decision support system. Are we together, class? Hello?
Yes, sir.
Okay, is it clear?
To be truthful, this one did not enter at all.
Okay. So look at it. We are looking at decision support system, right? And we say it's a group of information system program routines that aid decision makers to use computer information and data to make effective decision. So it is an information system program routines that aid decision. Do you understand what the decision support system is now?
Yes, yes.
Okay. Good. The program that aids decision. Okay. Then now it comes in 3 categories. You understand? It comes in 3 categories, just like when you have, just like some accounting software that we have that have different modules or section. You will see that there is an aspect of payroll, aspect of generating financial reporting, aspect of bank reconciliation. They come in different, you understand, different aspects for performing different tasks. Are we together? Hello, class.
Yes, sir.
Good. So it's the same thing with this decision support system. It has different categories. It comes with different categories. The first category is the communication driven. This one allows you to communicate. This aspect allows you to communicate. When you are connected to the internet, you can send emails, you can chat, you can even have meetings, just like the lectures we are having now online. So the aspect of this communication driven will allow you do this on the system. Then the data driven aspect. The data driven aspect mostly is used by these airlines. Now you can go online now and book an air ticket. So it is that driven aspect of the decision support system you are using. Is that data driven aspect of the decision support system that you are using to be able to make that booking online. Do you get it now?
Yes, I do.
So the same thing with hotel reservation. Any hotel reservation that you make online, you know, when you make it, the information you enter will automatically goes to their database. From their database, they will see so person has booked so room. You understand? Or so person has booked so flight from so place to. You understand? So this is what this is saying. Okay. Then the document driven. The document driven. This one will allow you generate documents and even share documents. We do this, generate document, we share document online. So there is this document driven aspect that allow you to carry those tasks on the decision support system. So with this, using this, you can easily locate documents, web pages, electronically without any human interference. From the server, once it is stored in the server, you can just enter and you access it through this document driven. So it helps you to access documents. It can also, we also use search engines such as Google and Yahoo. So it is also that aspect of the document-driven decision systems that allow those things, that allow us to do this. You can go online now, you can Google and even download documents. So it is this document-driven DSS, the decision support system, that allows this to happen, that you can even go, you Google, you access it, and you download it to your phone or your system. Then we have the knowledge. The knowledge-driven. The knowledge-driven support system. This class of decision support system is equipped with a knowledge engine, which often captures and stores the wisdom of experts in a particular field. So in this aspect, we have expert view and knowledge captured and stored. So this knowledge driven will allow you to access those experts and wisdoms expert stores in the system. You understand? Have you ever visited hospital and the doctors are browsing to diagnose? Sometimes it happens. They will browse to get some information. So it is this knowledge-driven decision support system that helps them in carrying out these activities. They are mostly used by professionals to share knowledge. Then we have the model. The model-driven decision support. So this model now is all about business models, just like the inventory models use, optimization models. So all these models in complex organization, it is this model-driven decision support system that you use to handle tasks relating to this. We have inventory models. What type of inventory models organization adopts? Manufacturing plants, managers, executives, when they are confronted with decisions such as make or buy. So it is this model-driven decision that one will use to guide them in making decision. Any question regarding this? These are the 5 categories of the decision support system. Any question? Do you all understand?
No question from me, sir.
Okay, so I'll assume no question now. So let's see.
I don't have any questions, sir, but if you could please move your slide a bit, let me complete the executive system.
Okay. Is it okay?
You have taken it too much because I'm doing executive system.
Okay, executive.
Yes.
Is it okay?
Business decisions. Please go move again.
When it's okay, you let me know.
Okay, sir.
Is it okay?
Please.
Is it okay?
No, sir.
Is it okay?
Yes.
Okay.
Thank you, sir.
You're welcome. Okay, you're done. So now we are going to look at the role of information system in organization before we round up the class. So let's look at the role of information system.
Please, you're not speaking into you're sounding distant.
Okay, I said we are going to look at the role of information system in organization. Can you hear me now? We'll look at the roles. The role of information system in organization. So what role do information systems play in organizations? So that's what we are going to look at. One, it enables decision making. Information systems enable decision making in organizations. That's one. Two. Two, it improves communication. Improve communication and collaboration. Improve communication and collaboration. It enhances efficiency and effectiveness. Four, the fourth one, gaining competitive advantage. So now these are the roles of information system in organization. These are the roles that information system plays in an organization. One, it enables decision making. Information system provide managers and other stakeholders with timely and accurate information in order to make informed decisions. So that's one of the roles. It enables decision making by providing managers with accurate information. Then two, improve communication and collaboration. Information system automate process. It automate processes, reduce errors, and save time, leading to improving communication and collaboration. It enables communication and collaboration within organization. Allowing for seamless sharing of information. When systems are connected with the internet, there will be free flow of communications within and even outside the organization. And it also, the information system also help in collaboration between employees. It helps collaboration between employees and also employees working in the same team to share knowledge. Then it enhances efficiency and effectiveness of organization. Then gaining competitive advantage. So it's enhanced efficiency and effectiveness by reducing errors and and saving time. When you're using information system, you automate your activities, no human interference, so there will be minimum errors. The errors will be minimized, and then there will be speed. You will save time. Then the gaining competitive advantage. It assists organizations to develop new products, services, giving them a competitive edge over their rivals. Those using information system will have advantage over those who are still using manual, who are still operating manually. Because with the information systems, you will have better design for your products and services. And that will give you an advantage over your competitors who are not using the information system. Is that understood? Hello, class?
Hello, sir. I can hear you.
Is that understood?
I didn't
Am I
really get
audible?
my network was bad.
Wow. Okay, can you hear me now?
Yes, I can hear you, sir.
Okay, we are talking about the role of information system in organization, the role that information system plays in organization. But we said it enables decision making. That's one of the roles it plays. How did it enable decision making? By providing managers with timely and accurate information. If managers have timely and accurate information, that will help them to make effective decisions. So that's one of the role of information system. Two, we said it improves communication and collaboration. So we said information system enables communication and collaboration within organization by allowing for seamless sharing of information. There will be seamless sharing of information within the organization. It can be through email. You'll be exchanging mails without any officer have to leave his table to go to the other officer. The same thing, you can be attending to other organizational businesses within the office premises without going out through the internet. Be receiving queries and be answering queries. So it is the information system that enables this in an organization. Then it enhances efficiency and effectiveness. It enhances efficiency and effectiveness in the sense that it reduces errors and also creates speed. So by speed, we will save time. You understand?
Yes, sir.
Hello? Do you get it now? Then the last one, which we said gaining competitive advantage. We said it can assist organizations to develop new products and services, giving them a competitive advantage over their rivals. Those organizations that use information system, they can use information generated from these information systems to improve their services and their products. And they will be in better position than those who are not using information system, those who are still operating manually. Is that clear now?
Yes, sir.
Okay, so that is it. So now let me just give you limitation of this information before we call it a day. So we have limitation of management information in providing guidance for management decision. So this one you can take it as the limitation of management information. The limitation of management information. So this is the limitations. One, when it lacks lack of comprehension. If nobody understands it, then it is of no use. Real-time information, that is one. And two, external factors. External factors. Three, data accuracy and reliability. Then four, human and technological capabilities. Then number five, which is the last one, then we'll just give number five, costs of information. So these are the limitations of the management information system in an organization. So one is the lack of comprehensive real-time information. Lack of comprehensive real-time information. So this one means management information will not always provide a comprehensive real-time view of a business. It may not always provide a comprehensive real-time view of a business. This can be problematic in dynamic environments. The need to collect and process data can lead to delays in information delivery and timely decision making. So when there is need for real-time, for comprehensive real-time information, and it is not provided, that will be a limitation of the management information because it will affect decision. We say information has to be timely. So if it is not coming timely, it will affect decision. So in a situation where you need a real-time information and you are not getting it, it will definitely affect decision. So it is a limitation in the aspect of management information. Then external factors. External factors. Management information may not adequately consider the impact of factors not within the organization on the business. Businesses need to monitor external factors. What are these external factors? Such as competitors. Competitors, those who are operating the similar or the same business you are operating, who are providing the same services or products that your organization is providing. They are the competitors. So you need to monitor them, you need to monitor their activities. And also government regulations. Government regulations, you need to monitor government regulations so that you will not break government laws. Breaking government laws that can affect your business, it can even cost you a lot. Then the general economic condition. You look at the general economic condition, ranging from the interest rate to inflation. All these are external to the business. You only need to understand this and know how to manage them because you don't have control over them. They are external. Then data accuracy and reliability. The accuracy and reliability of the data used in providing information to the management are crucial to decision making. So the data that you will be using have to be accurate and they also have to be reliable. There should not be errors or inaccuracies in the data. If there is any errors or inaccuracy in the data, it will lead to poor decisions. So these are some of the limitations. If the data are not correct, they are not from reliable source, the decisions will be poor. Then human and technology capabilities. People were considered as one of the key elements of information. Yes, human beings are one of the key elements of information system. Reason because it is human beings that operate the information system. So they are key to it. That is why the other time I told you that the hardware, the software, and people are part of management information system. They are key to management information system. To the extent that organization personnel are at the center of it all. This means that as long as humans are connected with information systems, potentially emotions may set in, and where the emotions individuals are bound to behave in very many diverse ways. So you see now, human interference is a limitation. When humans begin to interfere with the technology, begin to manipulate, then there will be limitations. That is one of the limitations of the management information. It is controlled by humans. So there could be human errors or emotions may set in, and human may decide to manipulate some data. So that will bring a constraint or limitations to the management information. Then cost of information. Because of producing and maintaining the information required by management can be significant, and if not managed well, could limit the quality of information used by management in making certain decisions. So the cost too can be a limitation. Managing an information system is not a small thing. It costs a lot. So if care is not taken and not properly maintained or managed, it will affect management decision. It will affect the quality of information that will be produced, and that will also affect decision. So is that clear? I think we are going to stop here today. If no question, if there's any question, let's have it. If no question, I will draw the curtain here. Hello?
No question from me, sir.
Okay. What of the other end? Any question?
No question from me, sir. Thank you very much, sir.
So thank you very much. Wish you all the best. So see you next week.
Okay,
Okay,
sir.
sir. Thank you.
Okay, thank you very much. Esse maçã